Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome out to the Insights. Just noticed the other day that last weekend the upload did not take place. Not sure exactly what happened or where the glitch was, but apologize for that. And one thing I said in there is that with the holiday week, especially it being a slow week, and Christmas plus traveling for the holidays was just going to be too hectic and internet was going to be spotty. So I had mentioned in that I was not going to do any updates during the week last week. So, but since I didn't get up and you didn't get that and had no clue and probably wondering what the heck's going on, I am going to shoot off an email and ask them to give you another week extension. I know I've done that a couple times, technology glitches, and there's been lots of changes going on lately too. So changing from servers to cloud and lots of stuff like that. So I'm assuming that's probably where the glitch took place. Things are always changing, and sometimes transitioning makes it difficult. So we have these things happen. So, but it is what it is. So with that being said, so you're in the know now. Let's get to business. Starting off with a quote. I thought this would be appropriate for this is the final week-long deal, and I will be doing at least one, if not two, updates this week. Shouldn't be as hectic with the new year and stuff coming up, but it's always kind of crazy. But they won't be like Christmas, so I'm not going anywhere. Just going to stay home and play. So, but I thought this was appropriate. Tomorrow is the first blank page of a 365-page book. Write a good one. And regardless of where you've been in the last year or the last several years, it's always good to have a fresh start, right? And with respect to trading, it is difficult. It's tough. It's one of those things that is always challenging. And if you've had the last year, if you look back and see where you were and where you're at today, I would hope that you've made some significant improvements and start off the new year right. And vow to get better every single day and learn from our mistakes and the things that we do that we need to get right. So basically, let's just make this next year awesome. Let's make it better. So with that, let's get to it. And I'm just going to do one recording today, just for not only because it is year end, and when we look down here, look at the economic data, there's only a little tiny bit coming out, Dallas Fed. There's really nothing significantly except for consumer confidence, but that hasn't been a big deal lately. So for the last several years, actually. And with the new year coming, there's not going to be a ton of stuff going on. But we'll do this real quick, and the internet is spotty here, so we'll see. Hopefully it'll be relatively quick. So I'm just going to do the economic data, the overview, and market overview. That's what I was worried about. And it's still trying to load. While that's happening, we're just going to look through earnings. Again, I'll check to make sure this is going here, but we'll look at the charts, the market, the overall market. And as you can see, I mean, this last week, no surprise, it's very, very, very common to have a bullish move on a major holiday week like this week. So no big shocker. Volume's light, no big shocker. We can't really read anything into that because so many people just take off. Like myself, just go on vacation, don't do anything. So don't do anything with respect to trading. There's not a lot that's active. So not unusual, not uncommon to see what happened this last week. So just looking at the overall markets, we're still bearish. I mean, technically we've got a lower high, and the three major markets are all the same. The transports as well, still bearish. So we'll see if it turns over from here. The Russell had a bigger gap than the other markets did. And not sure why that's getting slow all of a sudden, but let's try reloading this. If we miss earnings, I mean, you can all look up earnings this week. If we can't get the earnings to load up here, then finding them is not that difficult. And there's not a whole lot coming up, I don't think, this week. So, and Russell gapped up for some reason big time the other day, and didn't really sell off much. So nice little spinning top there. See if this came up. It is not going to. So yeah, you can go look up earnings. And we'll see. So it's not uncommon though. Like I say, there's the what they call the Santa Claus rally before Christmas. Didn't really have that. There's indications that things are showing. There are signs of weakness, and typically you've got the Santa Claus rally, which generally speaking is bullish, and then if things are bad in January, they sell off in January. So, but we'll see. We don't know. We'll just watch the charts and see what happens, see what comes up, and whatever happens, happens. So it's kind of the attitude we have to adopt, is just going with the flow. As the market is going to do what it's going to do regardless of what we want. And there's the VIX, back down about just shy of 16. So not really giving us much information. I'm going to try one more time just to get this going, see if it'll work. I'll come back and look. But we'll start getting through. Excuse me. We'll start getting through the charts. We got 17 in the big guys this week. And there's only, I think, 2 or 3 of these maybe rollovers. Yeah, that's not going to work. I'm not even going to try anymore. I don't want to waste time on it. ACN, which you will notice in the spreadsheet, is a .cn. So you'll have to, if you import those, if you copy and paste those into eSignal, you want to change that, take the dot out. Got to put it in there because otherwise Microsoft Excel changes it to CAN, which is annoying, but it is what it is. So again, just looking at the longer term picture, you can see there's a weekly chart. There's all of it. We've broken that, was it 104 area? Broke it big time the week before last with big volume, huge move to the downside, and then a very small rally back to the upside. Again, excuse me, we could point to the volume, but it's a holiday week, so the volume's going to be light anyway. So is it light compared to what it normally would be on a regular week? It's hard to say. So because of the holiday week, I'm not even going to discuss the volume being an issue. But if this breaks back down, then I would be very excited about a downside move on that. American Electric Power, we got a triple top starting, but at the same time, we have an ascending triangle taking place. I don't even know if I saw that originally. Interesting part is we could draw that on there. It might even be a little bit bigger than that. But we essentially have an ascending triangle, and that's really what I'm looking at that's it. Looking at the bullish side, and part of it is because of this. We're not only pushing the bands, we pushed outside of them. Everything is looking bullish here. So what I'm looking for here is a breakout to the upside. As you'll know, I'm not a huge fan of the resistance. Even though last time it hit here and dropped very quickly, could be a great downside play, and that's possible. It may set up. If we get action like we did back here, where we had 4 or 5 days where it danced around that line, that 58.40, and then gives us indications of weakness, then I might be looking at a downside play. As of right now, I'm looking for a breakout to the upside. So, and let me make sure I get the right key here, so I don't stop it. We're going to target of 62, so we got a good $3 of potential. So, I love the looks of AEP right now. The first two I love. There's a couple here that I'm a little lukewarm on. AET, Managed Healthcare. Aetna, looking bearish. We're still in that downtrend. And testing that level there, what is it, 105? 110? Looking for a target of about 105, basically. So this is one that I'm kind of lukewarm on, not that excited about. Albemarle. Nice little beginning of a possible pennant pattern, flag pattern. We've got basically it's a mat hold there. In fact, that's beautiful. That is pretty much textbook. As close as you can get, just about. And it's been beat up over the last year or so, last 8 to 10 months. But it's moved upward. And notice all the indicators, it's pushing the bands as well. And looks very bullish as of right now. We'll see what the action looks like this week, though. Alaska. Let me go back to that. Keith had asked for a little description of the emotions of why things happen. So let's get into this pattern right here, the mat hold. We'll do this very quickly. Mat hold's fairly simple. I mean, you've got a big bullish day, right? And then 3 days, the perfect textbook pattern is inside the body of the first day of the pattern. You're looking for 3 small candles, small spinning tops, basically inside the body. Here we've got, the first one's not really inside the body. The second one kind of is, and the third one is. We've got three basically small days, not real big. The wicks and the shadows don't matter. So in other words, the bulls got very excited about it the day one. The second, third, and fourth day of the pattern, it just kind of, they're lukewarm. It's kind of a tug of war back and forth. Not really that excited about continuing to run it. But then on the fifth day of the pattern, it takes off and rallies again. And another big up day. And the textbook rising 3 would be, it would start somewhere down here at 49, between 49 and 50. A mat hold is essentially a rising 3 where the last candle of the pattern starts. The technical way is to start above the close of the first day of the pattern to be perfect. But anywhere up in that area is considered a mat hold essentially. So it's basically just a stronger rising 3. Essentially, the bulls are in control. They take a little break for a few days, they catch their breath, and then boom, they run it again. Says, okay, we really are excited about it. The first day was real. I know the last few days we were just kind of chilling out and relaxing. But now we're serious, and now we're going to take it and run. So not only did we get that mat hold type of pattern, but we got a follow-through day after that, which broke out of the resistance level there at 55.50. So very solid pattern, looks very bullish as of right now. So I like this. I'm kind of excited about it. So we'll see what that brings this week. Alaska, this is a rollover. This is from last week. It's been on the radar for a few weeks now. And this is kind of a 50-50. The transports have been getting destroyed, and Alaska's part of that group. And it's staying up here. Just like it's interesting to see a lot of the cruise lines have stayed up and actually been very bullish, even though there's signs the economy is getting weaker. So, but then again, they could take the tail end of it. We'll see. Alaska's holding that line there just about 82. So if it holds it and bounces from here, I'd be bullish. If it doesn't and it breaks through below that support level, then might change the plan, might just leave it alone, depending on what the action looks like. So AMSG, now here's the beginning of, go back to a longer term picture. What we basically have is the very beginnings of a falling 3 or a bearish mat hold. Because you've got one big down day, lots of volume, and then 4 small days, not quite inside the body of the first day, but still the bodies are there. So if we get a big move to the downside sometime this week, then especially if it had a lot of volume pushing it, we'd have a pretty good solid bearish pattern on AMSG. So we'll see what that brings. Buckeye Partners, a weekly picture, and obviously a big V-bottom bounce. Not terribly excited about this for several reasons. Number one, we've got a lot of momentum going to the upside. Very well could reverse and just drop off again. Possible, not likely. So I'm not extremely excited. If this thing hits the entry point, I would take a smaller position than normal, just because I see it as riskier. I think if anything, this thing will probably go sideways. You look at the last time, back in September, October, when this thing tanked, it bounced, V-bottomed, it rallied up for, 5 or 6, 7 days, and then it went sideways for a week, week and a half. And then it sold off a little bit, then it went sideways for another month or two before it actually fell big time. So that's more of what I would expect here, but preparing for it just in case. And it might dance around it this week, up around this resistance level there at 64.75 or so, and then roll over. So this might be one to keep an eye on, and maybe it'll present something next week, the week after. So we will see. Cardinal Health, another one not terribly excited about because it's basically halfway to the target already. Not a very big target anyway, only a couple bucks on an $88 stock, so not terribly exciting. But what we do have, weekly, is a nice bullish move, a nice consolidation pattern for a month and a half, and then a beautiful breakout, other than the fact we don't have a lot of volume. But it's on a week where we don't have a lot of volume anyway. So this thing basically needs to pull back. But if it pulls back later in the week or even early in the week and bounces off that support level and gives it an opportunity, okay. But that's probably one of my least favorite on the list because there's just not a big range. You're talking a 2% move. There's not a lot of profit potential there, so not terribly excited about it. But playing the patterns, right? So Canadian Railways has been dropping off for a little over a year and a half. You can see it's been very bearish. And we are bumping our head there against 57. This is another one that, again, as you know, I like breakouts. That's what I prefer. But sometimes, if there's something significant enough, we've got a resistance level. That old support there, 57, it bounced, and then it cracked right through it. It's back up there again, and there's a decent chance it will drop from here. So if it does, again, this is one, if you normally do 10, I'd probably look at 5, maybe 7 or 8 contracts. Just peel back a little bit and take a little less risk. Canadian Pacific. Nice little double bottom forming there. And we look at the long-term picture, and there's the interesting part is you got Canadian. I think this was, we're looking at a bearish look on Canadian National Railways, and then Canadian Pacific Railways actually has a double bottom, so it looks kind of bullish. It's interesting the contrast between the two, where you would think that they would go hand in hand in tandem, but they're not. Canadian Railways is at this point significantly weaker, but we do have that double bottom in place, and then you've got indicators showing that it looks like it wants to go up from here. That's why I set up a bullish trade. So if it does break out, because that's what I prefer, if it breaks out of that 129, then there's a decent chance, especially with the big sell-off it's had, there's a decent chance of it running up to 135, 138, somewhere in there, because of the size of the sell-off. In other words, it could be a short covering rally. There's lots of things that could happen. If it drops off from here, now that's a different story, and we could very easily, in fact, I probably should pull that down here, could very, very easily drop all the way down here to 115. So we will see what happens with this and take it from there. So Facebook. Oh, the lovely Facebook. And this interesting one, there's not actually any kind of pattern here that I see, except that it's just been going sideways for 2 months. Then you look at the bands. Bands are pinching. It's actually sitting right at the 50-day. So if it breaks all that, and the indicators look bearish, then everything looks perfect for a setup for a bearish move, and it could be very quick. Anytime you get a pinch like this, a lot of times the longer it pinches, the longer it goes sideways, the faster and further the move is. Moving on to General Mills, good old food company. A friend of mine used to work for these guys years ago. I made the mistake of listening to him on earnings. He said, "Oh, we're going to miss. Or I can't remember what it was. It's been a long time ago. Or they're going to blow away earnings, or something or other was going to happen, and the exact opposite happened. He had no clue. He's a great guy, but he was a sales guy. He went in and did so he didn't have any inside information. He didn't have any more information than you and I had. So, except that he knew the company better than I did. So, I took him on it and thought I'd take a shot at it and a risk, and it didn't pay off. So, just a little word of caution to be careful who you're listening to. Some people, you may think they know what they're talking about. They really don't know any more than you and I have access to. So, looking for a possible breakout, guys. Nice little ascending triangle, about $4 of potential there. If we take the conservative spot, we could have gone back here and measured from back here and probably got about $5 worth. But as you know, I always take the smaller side, and then if it blows through it, then fine, because you scale out of it, take a little piece of it, and it keeps running. Who cares, right? It's just gravy then. So, but I love this. I love the looks of this because of the setup where it's at. Everything's starting to set up. Indicators are looking good. Earnings, you can see what happened with earnings. It dropped off, gapped off, and then it's recovered. So if it can break out and push higher, it's a very good sign for the bullish move here. So that I would think it would continue if it does break out to the upside. LyondellBasell Industries, no idea what it's a chemical company. Look at that symmetrical triangle. It's been in for a year and a half. Good a weekly. It's crazy. 110 to 70. Right now it looks bearish. We've come up and bumped our heads on that 89.90, that 90 area basically. It's a little bit, let's see, what 89.70 cents. We got about 6. It's close. 88.17. That's 83 cents. And we're looking at about, well, $5.50. No, I'd have to bounce up 30 or 40 cents to justify it. But kind of mixed signals here when you look at the indicators. The band, or the, not the bands, but the moving averages are just becoming spaghetti, getting intertwined and tangled up. So those don't really tell us much, except that we've bounced off the 20-day and it's headed south. Stokes, yeah, it's turning down a little bit. MACD looks a little bullish. Kind of mixed signals there, not much. So not terribly exciting. Macaric, beautiful symmetrical triangle. About as textbook as it gets. Be nice if it would have come in a little bit better uptrend, but it still works. So we will see what this brings if it breaks out to the upside. There we go. That's what I was trying to get to. And everything's basically setting up perfectly. Because if it does take off, Stokes is in a perfect spot. Notice here, last time it broke out, and when it ran, it was just in a rally. Stokes just sat up there for, what's that, 3 weeks, probably 4 weeks? Just stayed right up there at the 80 line, just hugged it, and ran straight across it. So that's why it's hard to believe Stokes in a trend. So it's setting up. It's in a perfect spot to do that again. Bump up there and just stay there. MACD, same thing. Looks like it's getting ready to lift off. So if this breaks to the upside, another one, I like the position that it's in, because if it does break to the upside, then we're in good shape. We're ahead of it. We're ready for it. We're prepared, and we can catch it. And there's a pretty good size move. A good, what, $4 or $5 potential? I think about 4.5 on an $80 stock, so 5-6%. So should get about 50 to 60% then on an option trade. Ascending triangle, another one. 2 or 3 of them this week. Don't see them a whole lot, but this is on Northrop, which with the chaos in the world happening is no surprise. A lot of the defense contractors should be doing just fine, but then again, geopolitical stuff has us kind of, iffy. So kind of a mixed on that, but it's in position where it could break out very easily to the upside if it does. Again, it looks very similar to the Macaric, which I don't even know who they are. Macaric, it's a real estate. Never heard of those guys. They have Apple symbol. I bet Apple would like to have that, Mac. Then again, maybe not. They might want an iPhone. Excuse me. So we'll see what happens with Northrop. If it breaks out, could turn out to be a great trade. Cena, another ascending triangle. Look at the longer term picture there. About $7 of potential. Interesting thing is here, if this breaks out, the target is in the middle of a previous range. So we've got some resistance up there about 61, but we've also got some at 56.5. And the target from the ascending triangle, the pattern itself, is basically right in the middle. There we go. So we'll see. I mean, it might only make it to 56.59. So this is one where scaling may come in handy, where if it gets to 56.59 and shows any signs of weakness, you might want to take a large portion of it out. If it blasts right through it, then awesome. Maybe it goes to 61. So we'll see what happens with this. Indicators are kind of mixed. And then last but not least, finish up with a railroad. Union Pacific. Nice little double bottom forming there. We go look at the longer term picture. And anybody that bought into this thing up here at 110, 120 has been railroaded for the last year. No pun intended. Well, okay, it was. I couldn't help it. It was just too easy. But you see indicators are starting to turn bullish, look good for a bullish move. It's sitting right at the midpoint of the pattern. So if it breaks to the upside, love it. If it doesn't, it breaks down. Not too excited about it, but there's still $3 of potential there, basically. So we'll see what the action brings on Monday. So with that being said, I'm going to wrap it up, and we'll be coming back to you in the next day or two with the little guys and an update. Y'all have a great night. Hope you had a Merry Christmas. And if I don't see you before, have a Happy New Year. Take care. Bye-bye.